Let me be completely honest with you right now. Most people will never build wealth. Not because they are not smart enough, not because they do not earn enough, and not because they got unlucky. It is because nobody ever sat down with them and explained the basics in a way that actually made sense. And today, that changes for you. You have probably felt it before. That quiet, uncomfortable feeling when someone starts talking about stocks, compound interest, or investment portfolios, and you just smile and nod, hoping nobody asks you a direct question. That feeling is not ignorance. That feeling is a gap that was never filled, and it is not your fault. Here is where it gets painful. Every single day that you do not understand how investing works, money is slipping through your fingers. Not dramatically, not all at once, just quietly, slowly, day by day. Like a faucet dripping in a room you never walk into. You cannot see it, but the puddle keeps growing. Think about this. People who understand investing basics are not necessarily smarter than you. They just learned something you have not learned yet, and once you learn it, the game completely changes. That is exactly what we are doing right now. Before we go further, if you are already feeling something shift inside you, if something is clicking, there are related programs linked down below in the video description that go far deeper than what we can cover here. These are for people who are serious about turning what they learn into real results. Not everyone is ready for that, but if you are, do not wait on it. Now, let us talk about what investing actually is, because most people have a completely wrong picture of it in their head. Investing is not gambling. It is not throwing money at something and hoping for the best. Investing is simply putting your money to work so that it grows while you sleep, while you eat dinner, while you are living your life. That is it. Your money becomes an employee that never calls in sick, never asks for a raise, and works around the clock. The single most powerful concept in all of investing is something called compound interest. And if this one idea does not stop you in your tracks, read it again until it does. Compound interest means that you earn returns not just on the money you put in, but on the returns themselves. Your growth grows. Your earnings earn. It is money multiplying on top of itself. Here is a number that will stay with you. If you invest a small amount every single month consistently, over decades, the majority of the wealth you accumulate will not come from the money you personally contributed. It will come from the growth stacking on top of growth. The math is almost unfair in your favor, but only if you start. The cost of waiting is the part nobody talks about loudly enough. Every year you delay is not just 1 year lost. Because of compounding, every year lost near the beginning is worth multiple years at the end. The first dollar you invest is your most powerful dollar. The one you invest 10 years from now is far less powerful. This is not a scare tactic. This is simple mathematics that the wealthy have understood for generations. Let us talk about where people invest. Because when most people hear the word investing, they imagine complicated trading screens and people shouting on a stock market floor. That is not reality for everyday investors. Stocks are simply small pieces of ownership in a company. When a company grows and becomes more valuable, your little piece grows with it. You do not need to pick individual winners. You do not need to be glued to your screen. You can invest in funds that hold hundreds of companies at once, spreading your risk automatically. Bonds are more like lending your money to a government or company. In return, they pay you back with interest over time. Lower risk, lower reward. They create stability in a portfolio. Index funds are the secret weapon of long-term investors everywhere. Instead of trying to beat the market, you simply own the market. Study after study, decade after decade, shows that most professional fund managers cannot consistently outperform a basic index fund. Think about that. A passive strategy has beaten most active professionals over the long run. That is not opinion. That is historical record. Real estate is another avenue. Physical property, rental income, appreciation over time. Some people do this directly by owning properties. Others do it through real estate investment trusts, which let you invest in real estate portfolios without actually buying a building. Here is where the disqualification matters. If you are thinking this is all for people who already have a lot of money, you are wrong. Some of the most powerful investment vehicles available today let you start with very small amounts. The barrier to entry is not money. The barrier is knowledge and action. Now here is something that separates people who succeed at investing from people who do not. Emotion, specifically the ability to control it. When markets drop, and they will drop, most people panic. They sell, they lock in their losses and run. And then when the market recovers, as it historically always has, they have already exited and missed the rebound. The people who win are not the ones with the best predictions. They are the ones who stayed calm when everyone else was terrified. Discipline is the real investing skill. Diversification is the tool that protects you while you practice that discipline. Do not put all your eggs in one basket. Spread across different asset types, different sectors, different geographies. When one thing drops, another may hold steady or rise. It does not eliminate risk. It manages it intelligently. Risk tolerance is personal. This is important. Some people can sleep just fine knowing their portfolio dropped 20% temporarily. Others cannot. Your investment strategy needs to match your actual emotional capacity, not some ideal version of yourself. Be honest with yourself about how much volatility you can handle without making panic decisions. Time horizon matters enormously. If you are investing money you will need in 2 years, your strategy is completely different from money you are setting aside for 30 years from now. Long time horizons let you take on more risk because you have time to recover from downturns. Short time horizons require more caution. Emergency funds are not optional. This is the foundation before you invest anything. You need liquid savings covering several months of living expenses sitting in a safe, accessible account. Because if something goes wrong in life and you have no emergency fund, you will be forced to pull from your investments at exactly the wrong time. Build the cushion first. Tax-advantaged accounts are one of the most overlooked advantages available to regular people. Accounts specifically designed for retirement savings allow your investments to grow either without being taxed as they grow, or with contributions made before taxes are taken out. Either way, you keep more of what you build. Using these accounts instead of just a regular brokerage account can mean tens of thousands of extra dollars over decades. Simply from understanding where to hold your investments, not just what to hold. Fees are the silent wealth destroyers. The difference between an investment fund charging you 1% per year versus 0.1% per year sounds tiny. Over decades on a growing portfolio, that difference compounds into an enormous amount of money that quietly leaves your pocket and goes somewhere else. Always know what you are paying. Always compare. Consistency beats timing. Nobody reliably knows when the market is at its lowest or highest. What works is putting in a fixed amount regularly, regardless of what the market is doing. When prices are high, you buy less. When prices are low, you automatically buy more. Over time, this strategy averages out beautifully. It is called dollar cost averaging, and it is exactly how disciplined investors build real wealth without needing to predict anything. Here is the truth that nobody in your life may have told you clearly enough. The difference between people who retire with financial freedom and people who struggle is not income. It is financial literacy put into consistent action over time. That is it. The knowledge itself is the turning point. Everything in this video is just the beginning. The principles are simple. The execution, the personalization, the strategy tailored specifically to where you are and where you want to go. That is where the real transformation happens. The related programs in the video description below exist for people who are ready to move from understanding to actually doing. Most people will watch this and do nothing. If that is you, that is okay. But if something in you today is saying this is the moment, do not let that feeling pass without acting on it. Opportunities like this exist for a reason, and the people who take them are the ones who actually change their financial story.